These signals are provided for educational purposes only and should not be treated as investment advice.
This is Huskins with the Forex Training Professionals reporting on the trade which we issued in the live trading room. The trade was issued to go short on the euro Australian dollar at 1.4035 with a 60 pip mental stop and a target of 110 pips. This video would perhaps give an explanation to why did we choose the particular entry which we did, why did we choose the stop loss level, and why did we choose the target level. Let us pull up the Trade the News platform to see what news was there. At 12:30 we had the Reserve Bank of Australia and it left its cash target rate unchanged. But in the statement it said the domestic credit and asset markets are showing more balanced market than 6 months ago. That's bullish. Private demand has been firming. That's bullish. Business investment is likely to rise strong. Bullish. Australian economy growing around pace. Bullish. Effects of earlier expansionary policy measures diminishing. That means bullish again. Uh, some evidence of a greater willingness to lend to business. Bullish. So bullish, 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 bullish all the way. The current setting of policy appropriate for the time being. Uh, the inflation rates, the near term growth likely to trend and inflation near target, underlining inflation to be in the top half of the target zone. CPI inflation would likely to be just about 3.0% uh, because of a tobacco tax. But so, all in all, they have very good things to say about the Australian dollar. However, they do not have very good things to say about the global economy. Global outlook somewhat uncertain. Europe likely to see slower growth over the next year. Growth in China slowing to a more sustainable pace. So it does not say that the growth in China is slowing down. It just making the rate of growth in China is fine. So all in all, the Australian Reserve Bank expects the fundamental news from Australia to be pretty strong. Then we looked at the currency strength meter, and at that time we saw that the euro was perhaps the weakest currency. So now, if we want to go short on the euro, the best currency to do that, to go long on the Australian dollar, the best currency to do that would be the euro because euro is weak on its own. So pair something which we'd want to increase in value versus something which is perhaps depreciating in value. We saw other charts such as the Australian JPY and Australian US dollar too, but it did not give us a confluence of events. Then we looked at the Euro Australian dollar, and the Euro Australian dollar uh, turned up to give us a very good uh, potential entry at 1.4035. I'll explain to you why. On the daily chart, we have a downtrend on the daily chart on the Euro Australian dollar. Always buy rallies in a downtrend. That's the age-old saying. So buy rallies in a downtrend. And if you have seen that even when the market has been consolidating, which it has been for some time now, there hasn't been even one instance of a higher high. Or in all instances, the swing highs are always lower. I'll draw your attention to the same. This is a swing high. swing high, swing high, swing high. So in all cases so far on the daily chart, the swing highs have always been lower. So this is yet in a very strong downtrend. So if we get any opportunity to sell rallies in a downtrend, we'd gobble that up. Then on the 4-hour chart, we we see that we are in a downtrend even on a 4-hour chart with the most significant previous swing point being at 1.4095. So all said and done, to keep the integrity of the lower highs intact, we shouldn't see price rise significantly above 1.4095. That calls for a decent stop level as marked on the 5-minute chart out here. So 1.4095 would make a very good stop level, because in case the market is changing its direction and it's moving up, then it makes sense to get out of the position if we have a lot of closes above 1.4095. Apart from that, we looked at the 60-minute chart. The 60-minute chart gave us something very interesting. Um, the 60-minute chart was also in a downtrend, but one interesting observation from the 60-minute chart is that the favorite place for the euro Australian dollar to reverse from is the 61.8 fib level. From this high to this low, we nearly nailed the 61.8 to the pip. From this high to this low, the market reverses around the 61.8. From this high to this low, we nail the reversal to the pip. From this high to this low, we nail the reversal to the pip. Now from this high to this low, the reversal area is at about 1.4035. So it might be prudent to want to go short on the euro Australian dollar from 1.4035. And as for the exits, we've not so far had even one case of a higher high swing or higher low swing points, but we do not want to be the last man standing. So what if we are going to be observing a higher high swing point and the market might be changing its direction? In that case, even with 110 pip stop or a target, we'll be out of our trade below these lows. So we'd be out of a trade before 1.3951, uh, which I expect the market to go much lower than 1.3951, but I do not want to be the last man standing. So in case the market decides to go even up till the just 110 10 pips, I don't mind taking my uh, profits. I hope you all like the presentation on today's trade. Let's see how this trade turns out to be.